as a behavioral finance expert, can you share about your view of the meme stock mania as a whole for starters? And do you think we could see a comeback of this craze in 2022?
It was even now I love the perspective of it was, I don't know, a year ago, maybe a little bit more than a year ago. It's a very different perspective. So one thing I think is very important to remember circumstantially was that a lot of us were working from home on our screens all the time. We were not able to go out and engage socially with a lot of our normal social channels. And for a lot of people, I think meme stocks were not just a case of the possibility of making money. It was also a sense of community, of belonging, of a shared purpose or passion on some specific thing. There were like cute little in phrases. Like this was, at a very, very light level, this was a little bit cult-like because there was this sense of like us versus them, insiders and outsiders, and so on. And I think we need to recognize that during the period when it happened, during a pandemic, people were looking for that a little bit. They were looking for some sense of social connection. So looking at meme stocks is purely a financial thing. There's some interesting elements to it, but the short squeezes, etc. I think the most interesting elements are that component of um, putting on a kind of story or narrative about a specific stock that makes you feel good, makes you feel like something is wrong, not just in a like financial accounting sense, but in a moral sense. Oh, this thing should be more. Um, and I do think that the kind of like environmental circumstances that led to it, like isolation, quarantining, pandemic, blah blah blah, they'll have gone down. They can come back up, but they'll have gone down for right now. Um, the thing that happened is, there's this sort of like thinking about fighting the last battle. Um, when meme stocks were happening, the idea of a short squeeze against a hedge fund or of looking for these stocks that somebody thought was underpriced and just piling on um, retail investors to make the price go up. I think both that can happen here because now there's kind of an obvious playbook for it. Wall Street bets, etc. You can say like, let's pull another GameStop, let's pull another BlackBerry or Silver or whatever. However, it's never going to go down the same way because everybody else has seen that same playbook. Like no investment manager is going to get caught short quite the same way again. So the last thing that I think is really interesting about it is how it can have lasting impacts on those companies. So regardless of any of these companies' actual financials, what they're doing with the money, etc., GameStop, BlackBerry, they're still trading really elevated compared to where they were before they became a meme stock. So there's a permanent celebrity effect of having this thing happen to you that changes the way the market engages with you. And, like nobody is going to be comfortable going out shorting GameStop, even if it makes complete financial sense again, because there's this kind of like, oh, we've seen this play, we've seen this movie, and we know how it works, so we're not going to make the same mistake. Um, that that idea of there being permanent, long-lasting effects with how the market engages with a stock because of a specific experience it had is really interesting. The idea that like once you've had this meme stock thing happen to you, your stock will trade at a permanent premium. It makes companies want to be meme stocks, right? If you can get the Tesla effect, if you can get the GameStop effect, your price is just permanently elevated compared to other stocks. That's something if you're running the company, you're like, yes, I would like that, please. So I think that's a kind of interesting, almost sociological thing of how can we, if you are a CFO or a CEO, how do you make your company, your stock more meme-like so that you can get the benefit of that permanent elevation?